Good evening, sir. Yeah. Good evening, sir.
Good evening,
Welcome you all for this Sabbath, which is being organized by Southern India Chamber jointly with G. Ramachandran Memorial Committee. May I now request Mr. Ganapati, President Siki, to kindly take the proceedings, please.
Ahead of formally welcoming and setting the context for the 7th G. Ramachandran Memorial Lecture, it's my high privilege and honor to invite somebody to render an invocation appropriate to the by one of India's youngest playback singer award winner, daughter of a very distinguished singer himself, Mr. Unikrishnan's daughter, Uttara. Uttara comes with a huge amount of success behind her, the youngest person to ever won playback singer National Playback Award at the age of 10. And I now invite Uttara to render the invocation for this, to start the memorial lecture. Uttara, over to you. Uttara? Uttara?
காக்கை சிறகினிலே நந்தலாலா காக்கை சிறகினிலே நந்தலாலா நின்றன் கரிய நிறம் தோன்றுதையே நந்தலாலா காக்கை சிறகினிலே நந்தலாலா நின்றன் கரிய நிறம் தோன்றுதையே நந்தலாலா காக்கை சிறகினிலே நந்தலாலா நந்தலாலா பார்க்கும் மரங்கள் எல்லாம் நந்தலாலா பார்க்கும் மரங்கள் எல்லாம் நந்தலாலா நின்றன் பச்சை நிறம் தோன்றுதையேல் நந்தலாலா காக்கை சிறகினிலே நந்தலாலா நின்றன் கரிய நிறம் தோன்றுதையேல் நந்தலாலா கேட்கும் ஒளியில் எல்லாம் நந்தலாலா கேட்கும் ஒளியில் எல்லாம் நந்தலாலா நின்றன் கீதம் இசைக்குதடா நந்தலாலா தீக்குள் விரலை வைத்தால் நந்தலாலா தீக்குள் விரலை வைத்தால் நந்தலாலா நின்றன் தீண்டும் இன்பம் தோன்றுதடா நந்தலாலா காக்கை சிறகினிலே நந்தலாலா நின்றன் கரிய நிறம் தோன்றுதையேல் நந்தலாலா காக்கை சிறகினிலே நந்தலாலா நந்தலாலா.
Thank you very much, Uttara, for that absolutely fabulous invocation to set the context for the evening. Mr. Rajinish Kumar, Chairman, State Bank of India. Mr. Vivek Harinarayan, formerly from the Indian Administrative Service. My classmate and former Managing Director, State Bank of India, Pradeep Kumar. Vice President Siki and Managing Director of one of the most well-managed NBFCs in India, Mr. Arun Alagappan, Managing Director, Chola Investment and Finance Limited. Dr. Rajamohan Rao, Chairman, United Telecoms Limited and Chairman of the G. Ramachandran Memorial Committee. My uncle, my mentor, and Vice Chairman of the Sri Ram Group in Chennai, Mr. S. Natarajan. Grandson of G. Ramachandran, Chartered Accountant and member of the Executive, Mr. Siki. Krishna, distinguished past president, members of the executive committee of SICI, former bureaucrats, invitees, friends from the media. It gives me immense pleasure in welcoming you all to the 7th G. Ramachandran Memorial Lecture. It is my high privilege and honor to welcome the Chairman of State Bank of India, Mr. Rajinish Kumar, who will be delivering today's lecture on a very important topic, digital banking can, as COVID hastened the arrival of this new normal. As President of SICI and son of Mr. G. Ramachandran, I'm deeply grateful to you, sir, for this gesture. The Indian economy has been experiencing significant slowdown over the past few quarters. In the third quarter of the current fiscal, the economy grew at a 6-year low rate of 4.7% investment, and consumption demand had been languishing, and a number of stimulus measures have been taken to bring the economy on a growth path. There was a strong hope of recovery in the last quarter of the current fiscal. However, the epidemic has made the recovery extremely difficult in the near to medium term. The outbreak has presented fresh challenges for the Indian economy now, causing severe disruptive impact on both demand and supply side elements, which has the potential to derail India's growth story. We see the well-being of millions being impacted and the health systems reaching its limit. Governments are intervening with drastic measures to rescue health systems, economies, and jobs. For a functioning global economy, a functioning banking and payment system is vital as well. Yet, the financial services industry is facing another shock after the financial crisis of 8-9, with shrinking revenues due to the lower consumer and business spends, lower interest rates, increasing credit risk, and volatile capital markets. The pandemic has ensured that banking leaders have moved swiftly to protect customers, ensure the continuity of banking services, and focus on strengthening these institutions. This has ensured greater tech-driven offerings by banks and also to a surge in digital transactions as customers stay away from branches. The shift to remote working and serving customers through an online or mobile banking model has demonstrated the potential of innovative digital technology. Banks have started getting adjusted to the new normal. Bank branches closing down across the world has led to banks looking at a faster way to digital channel. The ongoing health crisis has presented huge opportunities. An analysis of last 4 financial crises as 16 market crashes in last 100 years has shown that financial industry got a positive opportunity each time, and even that is getting proven this time too. Banks could do well to look at moving into cloud because their data servers and application servers are going to be on cloud. Cloud providers will take the responsibility of securing their environment because globally they are doing this and they'll have a lot more resources. It's like shifting your bank risk to cloud service providers so that you can focus on core banking business and security and data center and are taken care by somebody else. So what is happening right now that could cause changing customer behavior? We are already seeing people making changes by avoiding cash as a potential virus transmitting payment instrument. ATM transactions went down by more than 50% compared to 2019 in the UK as an example. Using contactless payment methods as many merchants do not accept cash anymore. Shopping more on online platforms, willing to share data for a higher good. For example, in South Korea and China, with more countries soon to follow, people are actively sharing the data with apps that track infected persons and help save lives. Banks are also responding to the new environment through speeding up adoption of mobile payment mechanisms, opening up new digital onboarding capabilities for any type of banking services, investing in open banking capabilities to collaborate with fintechs, and speeding up the implementation of the digital banking agenda. A few thoughts from the McKinsey survey: innovate new products and propositions, pressure on interest margin, for example, means that alternative and new products could provide new sources of income, reshape physical distribution and shift to digital services and sales. Digital banking has soared under COVID-19, making a shift to a digital first model business. Build a leaner and more scalable cost-based. Banks must aim for cost improvement of about 25 to 35% to mitigate any wide economic downturn. Digital transformation is not new, but perhaps more relevant than ever. All players have a role to play in tackling the current situation and in helping the economy recover as quickly as possible. It's once again my high privilege and honor to welcome India's #1 banker, Mr. Rajinish Kumar, Chairman State Bank of India, to deliver the 7th Memorial G. Ramachandran Memorial Lecture. In this troubled last 4-5 months, he had connected with the people, the customers, and the industry in a manner in which it has never been done before. And to pay tribute to Mr. Ramachandran, I draw your attention to Mr. Vivek Harinarayan, one of the most successful career bureaucrats of the Tamil Nadu cadre, belonging to the 1980 batch, which also perhaps has the privilege of drawing the present governor of RBI from. Vivek was primarily responsible for making Tamil Nadu a go-to destination for Indian IT industry. In fact, at that time, many of us used to call him as the IT czar of Tamil Nadu. Vivek, following his retirement, is Managing Director of the OPG Group. And with those words of welcome to our distinguished Chairman, State Bank of India, may I now invite Vivek Harinarayan to pay tribute to Mr. G. Ramachandran. Vivek, the mic is yours.
Thank you. Thank you, Ganpa. Shri Rajinish Kumar, Chairman, SBI. Mr. Pradeep Kumar, former Managing Director of SBI. Arun Alagappan, Vice President, SICI. Jela Krishna, EC member of SICI. My good friend, Nanapati, President, SICI. Thank you for giving me this opportunity to pay a tribute to Shri G. Ramachandran IAS. The IAS actually in some sense becomes a part of our name. So you'll have to pardon me for that. And I was thinking about it, how do I offer my tribute? And I realized that the best way to do it would be to give a brief narrative as if Shri GR, as he was popularly known, himself was telling you and sharing some things about himself. My story will look like strange fiction to civil servants today. Born in 1927 in a village which had no electricity and where not even one single person spoke English, I would cling to my mother and not go to school till the age of 6. Unfortunately, my mother died at the age of 32 when I was 6 years old. Thereafter, I went to school, and there, Sri through Venkatacharya taught me the 3 R's and also initiated me into reading the Ramayana, the Mahabharata, and the Valmiki Ramayana, which as a young person I started to read at the age of 9, and I have read it every single day of my life for 28,100 days, 77 years. This gave me a perspective which stood me to the end of my life, 86 years in history. 1942, moved to Kumbakonam for schooling at the Government Arts College, where Professor Nambia asked us to write an essay on why we had chosen history as a subject. And recollect that I quoted from Napoleon to say that if you want to make history, then you must study history. That was read to the entire class, and I suddenly and importantly became one of the most important students. And history did give me many chances to make it, especially in the transition periods that I had while serving with different governments and changes that took place. At a tender age of 17, 1944, moved to Chennai, joined the Loyola College, where I recollect Father Adisayam. Father Adisayam's first assignment to us was to write an essay on social contract. And I remember consulting 12 books in the Loyola College and then going over to the Connemara Library to study about social contract and produced a document which was a 50-page document. When the notebooks were distributed in class, my name was suddenly called out and I was asked to stand up. I was trembling and afraid, have I done something wrong? Father Abhisayam called me to his chamber and he was angry. He was angry. Why? Because I had chosen the subject only as a BA pass and not as honors. In those days, you could talk boldly to your staff, to your teachers. And I told him that my father's intention is that I should study English and then economics. Let me tell you something very interesting about Father Abhisayam. In 1969, when I was chosen to go to Delhi and join the Prime Minister, Srimati Indira Gandhi's office, he came to meet us in Madras. And it was at his persuasion that my wife was asked to join me because she was a little reluctant to move from Madras, where she'd been staying for 20 years, to go to Delhi. And Father Abhisayam told her, have you not read the Ramayana? In which Sita, if Sita could go with Ram, then why can't you go with Ramachandran and go to Delhi? Father Abhisayam, quoting from Ramayana, I told you, what I'm going to give you, my narrative, might seem like fiction in these days today. 1946, got a triple first class in BA. 1948, stood first in the first rank in economics. There was still 1 year before I could appear for the IAS. And that 1 year, I decided to go back to Loyola College and requested the principal if I could become a teacher, a lecturer. I was immediately appointed as a lecturer in economics, and because of my good memory, I could stand up in class without a piece of paper and deliver lecture after lecture. It is for this reason that I was chosen to give a series of lectures, I remember in 1949, on the Keynesian theory, something again that, because I had studied so deeply, came in very handy when I worked in the government. I remember on the 14th of July, I gave the first lecture. Normally 15 students would come. But here the hall was overflowing completely. And not just the hall, but outside people were standing, wanting to listen to the lecture. That was the first. The second lecture was on due on the 21st of July, 1949. But on that day, the morning newspaper flashed the news that I stood first in the IAS examination in the entire country. I then went for the interview, where the chairman was Mr. R.M. Banerjee, and something very interesting happened, which I thought I must narrate. During the course of the interview, they asked me about zamindari abolition. Because of my good memory, I quoted from the Government of India Act 1935. One of the members of the jury who was there in the interview panel, she A.P. Jain, said, no, Mr. Ramachandran, I think you are confused. You are quoting from the draft Constitution of India, but mentioning it as the Government of India Regulation 1935. To settle matters, Banerjee Saab said, okay, let's get the books inside. And believe me, the books were brought inside. And Mr. Banerjee told Mr. Jain that I'm sorry, I think Ramachandran is right, and you are wrong. In today's circumstances, what do you think I would have happened? But I got the highest marks ever in the interview. As I told you, my story will look a little strange and a little fictional in today's civil service. The rustic boy had finally triumphed. But then there was a bit of a medical challenge which I had to undergo. And the doctors in the first round said that maybe I was not fit enough, but then I was ultimately able to qualify. I had no grudges against the medical fraternity. And to some extent, let me tell you that the Specialty Children's Hospital in Egmore, I had a small contribution towards its starting. 1949 was the year when I joined at the young age of 29. Let me move on to what history has given me as opportunity. The note on the economic policy to set social goals in 1969, as the member secretary of the 6th Finance Commission, the note that I submitted to the 13th Finance Commission, all those things have become now part of history and how we have contributed. I could go on and on and on. And I move out. and let me recollect my interactions with the great legendary Sri GR. I had read his book, Walk Through the Giants. And therefore, when I was going to meet him in his home with his family, I was actually expecting a giant. But here was a very fragile, frail person whom I met. And it was then that I realized that giants are not those who have large physical frames. Giants are those who think big, are large-hearted, and have minds and souls that soar above the ordinary. And that is what makes them extraordinary giants. I'm again blessed, not that I could offer a tribute, but that I could actually meet, talk with, and learn from a giant, Shri G. Ramachandran, IAS. May I now request Mr. Pradeep to introduce Shri Rajinish Kumar and the subject. Thank you.
Good afternoon to all. Mr. Rajinish Kumar, Chairman of SBI and my colleague when I was in the SBI. Mr. Ganapati, the Chairman of SCICI and my classmate from school. Mr. Vivek Harinaran, IAS, and the other senior officials of SCICI. At the outset, let me thank the Southern India Chamber of Commerce and Industry and the G. Ramachandran Memorial Committee for the opportunity to introduce the topic of the memorial lecture and the speaker, Mr. Rajinish Kumar, Chairman, State Bank of India. Of course, I think Mr. Ganapati has already given you a glimpse of the topic, so I'll keep my introduction to the topic fairly brief. All of us know the adage, never to waste a good crisis. While it is hard to find anything good in the current COVID pandemic, the challenging times do prompt us to question the status quo and find new answers more quickly. Even as the pandemic exacts a bitter toll on the economy, it is catalyzing digital transformation across business models, channels, and touchpoints. Underlying this shift is a need for greater organizational ability as well as closer ties with customers in a changing world order. The process of digital transformation, however, is complex and long drawn out for business as well as customers. Banking and payment, as all of you know, are critical pillars of the economy, from the core areas that's seen a major uptick in digital offerings and adoption. While going digital is not new to the industry, the pandemic has significantly accelerated the adoption of digital technologies with far-reaching implication for the future of not only of the banking sector, but of the entire financial ecosystem. The virus outbreak is spurring the adoption of contactless digital payments, and there's been a surge in such digital payment volumes across grocery stores, small retail outlets, online pharmacies, small vegetable and fruit vendors, recharges, bill payments, education tech players, etc. In these difficult times, the digital ecosystem with the banking system has built up over the years has proven crucial in fulfilling business transactions, peer-to-peer transfers, as well as government direct benefit transfers. Contactless payments through QR code, wallets, UPI, or contactless card are gaining popularity as they offer convenience, safety, and security while allowing the customers to maintain both physical and social distancing. The COVID crisis is likely to significantly accelerate the shift to digital and fundamentally redefine overall business landscape. Customer behavior and preferred interactions are dramatically changing. While they are likely to continue to evolve, the digital transformation we are witnessing will continue apace. It is not only about digitizing, the shift requires revisiting the entire value chain, which comprises not just the customer's journey, but also the other participants, especially merchants. The collaborative ecosystem of stakeholders committed to digital transformation is set to be the game changer, opening up access to banking and payment products for the masses. I don't think State Bank requires an introduction. All of you know the nation's largest bank. SBI has been leading the effort in digitization of the banking industry. It's been a pioneer in this journey. From installing a computer system in 1965 to handle mundane inter-branch reconciliation to the launch of SBI YONO in 2016, SBI has come a long way. It is therefore appropriate today that we have Mr. Rajinish Kumar, Chairman of SBI, to deliver the 7th G. Ramachandran Memorial Lecture on a topic which is current and relevant: digital banking has COVID hastened the arrival of the new normal. Mr. Rajinish Kumar is the Chairman of India's largest bank since 7th October 2017. Some of the important positions held by him earlier are Managing Director, National Banking, looking after retail banking initiatives in payments and digital banking; Managing Director and Chief Executive Officer of SBI Capital Markets, the merchant banking arm of the State Bank of India. Mr. Rajinish Kumar has been with the State Bank for almost close to 4 decades, having joined the bank as a probationary officer in 1980. Since then, he has held various assignments across various business verticals, including overseas assignments in Canada and the UK. He has vast experience in handling large credit, project finance, forex, and retail banking. Rajinish Kumar is also the chairman of SBI subsidiaries, important ones being SBI Life Insurance, SBI Foundation, SBI Capital Markets, SBI Cards and Payment Services. He also serves as director on the boards of various organizations, namely Exim Bank, Institute of Banking Personnel Selection, National Institute of Banking Management, Pune, Indian Banks Association, Khadi and Village Industries Commission, Indian Institute of Banking and Finance, amongst others. Mr. Rajinish Kumar is also a member of the Honorable Chief Minister's Advisory Councils on Fintech for the Government of Maharashtra. Born in January 1958, Mr. Kumar has done his MSc in Physics from Meerut University and is also a certified associate of the Indian Institute of Bankers. Mr. Rajinish Kumar, in the last 3 years, has led SBI admirably, taking the bank to new heights. The bank delivered a record quarterly profit for Q1 FY21 despite the challenging times. The market share of SBI in both deposits and advances has been progressively increasing during his leadership despite the onslaught of private sector banks. He has been in the forefront of accelerating the digital agenda of the bank, driving the flagship YONO offering. The YONO now has more than 24 million registered users. For the benefit of the audience, the YONO platform of SBI enables account opening, digital lending, including the agri sector, cross-selling of the group products, and access to other merchant sites. I'm sure during the lecture, we'll hear from him more about the digital journey of State Bank as also of the Indian banking system. May I now invite Mr. Rajinish Kumar, Chairman, State Bank of India, to deliver the 7th G. Ramachandran Memorial Lecture. Mr. Rajinish.
Thank you so much, Mr. R. Ganpati, President Siki, Mr. Vivek, Mr. Pradeep Kumar. It is indeed a pleasure and honor for me to giving the 7th G. Ramachandran Memorial Lecture. In fact, Mr. Pradeep Kumar approached me a few days back, and the only hesitation I could have is that whether I am the right and the competent person to deliver a lecture in the memory of a person of the stature of G. Ramachandran. So that was the only hesitation, nothing else. But it was, Mr. Pradeep Kumar was my boss when I was in State Bank of India, and you never say no to your boss. So that I still follow that. And about the today's topic, what I feel is that whether I now need to speak anything, because Mr. R. Ganpati and Mr. Pradeep Kumar has already said everything about digital, which I would have otherwise wanted to talk about. But still, because now Siki has invited me, it is my duty that I deliver this lecture, and which is about digital banking. Has COVID-19 hastened the arrival of this new formal? Siki had given me a choice of the topics, and I instantly decided that in this situation of pandemic, this would be one of the topics which would be of interest to the members of Siki, and that's why I chose this topic. Now, I don't need to define what is digital, but it may be interesting. First, I would start that how the banking system in the country, including State Bank of India, have been able to ensure that the banking operations go uninterrupted and at the same time follow all the norms of social distancing and ensure that the staff of the bank which comes in touch with the customers, they are confident, they remain protected, and their safety and customer safety, that in any case is the prime responsibility of the banking institution. And I can say with pride that the banking system in India has responded to this situation very well. Pandemic now, it is almost now more than 5 months when the Prime Minister first announced the one-day lockdown and followed by a 3 weeks lockdown, and then it kept on being extended. But one thing, and I'm sure that the members who are listening to me and who are the members of SICI, they can say that they have not experienced any disruption, whether they are conducting their business or they are conducting transactions on their personal account. And what has to be realized that during this period of social distancing and delivering the services, in PM's Women Jan-Dhan account, there have been more than 12 crore transactions every month, starting from the month of May, June, July, and almost identical number of transactions for transfer to the PM Kisan Samman Yojana. So 3 installments of 500 rupees each to Women Jan-Dhan beneficiaries and 2,000 rupees on 2 occasions to the PM Kisan Samman Yojana to the beneficiary farmers. And I have not seen anywhere, at least it has not come to my notice, that there has been any complaint from any quarter about the efficiency of the service or they not being delivered in the manner they should have been in this pandemic crisis. And this crisis, all of us know that it is once in a century crisis. So the crisis happened in 1920 when Spanish flu took or wiped off 6% of India's population. And SICI, of course, was born in 1909, and the State Bank of India's predecessor, Imperial Bank of India, was born in 1921. So it is almost 100 years. And I don't know, in fact, I have told my research team whether they can find something that how did the banking system, business community, and the country dealt with the crisis of 1920. But of course, we are in 2020, and it would be interesting to at least cover some of the journey which banks have made. Mr. Pradeep Kumar spoke about the State Bank of India being one of the first banks who in 1965 adopted technology or the computers for back office. And it was not till mid-80s that the banks were able to deploy technology which was customer facing. It was all about reconciliation, bookkeeping, and it was never customer facing. I joined this bank in 1980. And when I joined the bank, and most of you, they would have also experienced the banking services at that time. In 1980, everything was manual, and the ledgers were such that you have to be a weightlifter to lift those ledgers. The complaint would always be about non-application of interest, non-receipt of accounts, and difficulty in getting the your passbook updated. And this was the kind of banking which was happening. So in 40 years, it has been a long journey. It has been a transformational journey. And in this transformation journey, Even Mr. Pradeep Kumar, if I'm not mistaken, he was part of Project C&I, and he has also been main contributor or one of the main contributors in SBI's journey towards digitization. And mid-80s, the bank master systems came in the banks, and these were all standalone systems. The first ATMs which came in the early 90s, they all were standalone ATMs. And then the 91, 92 reforms happened. New generation private sector banks came in, and they came without any legacy and with the core banking solutions. And that is when the transformation of the Indian banking industry really started. And it was not an easy process, very painful process. I know that in the State Bank of India, when the call was taken to introduce core banking, internally also there was a lot of resistance when something new is introduced. And it took almost 5 years for the bank to connect all its branches and the ATMs, and this task could be completed only around 2009. I was also part of that process where bank started internet banking sometimes in 2003 or 2004. And many times it is the initiative of the service provider, and many times it is the demand of the customer which pushes any agenda for that matter. And I remember distinctly that at that time I was in corporate accounts group, and I was handling the account of one of the public sector undertakings, Gas Authority of India Limited. And its CMD, who called one day and said that unless you meet these requirements around internet banking, State Bank of India would not be the banker to Gas Authority. And that was a sort of a wake-up call, and after that we pushed the agenda. Many times people also say that the public sectors, and they cannot innovate, or they cannot move with the times. But my experience has been, and particularly while dealing with the corporates, that many public sector corporates, they have been in the forefront of adoption of the technology, even as compared to the private sector peers. And after the advent of the mobile and the explosive growth in internet banking, in the last 1 decade, everything has changed. And what has enabled that change? In India, the first is definitely, I would say, the technology stack, on the basis of which the unique identity card Aadhaar that has been built, organizations like NPCI and UPI, which is the envy of the world today when we speak of the payment systems, that innovation has been possible. Then we have thousands of fintechs and startups who are working in the area of bringing in new technologies in the area of finance and banking. And of course, the gem trinity, Jandan accounts, Aadhaar, and mobility, mobile banking, that has changed the face of the banking in this country beyond recognition. And we are on the cusp of a great technology revolution. It is still, I believe, the start of the journey and not the end of the journey. And just to give you some of the ideas, that State Bank today, we handle 450 million accounts, 45 crore accounts. It is impossible to handle 45 crore accounts unless you have a very advanced technology platform. And the technology platform not only for the back office functions, but for the front office functions, because ultimately, what is the purpose of any bank or any organization? The purpose is to serve the customers and serve it in a manner such that it is convenient to them, it takes care of their security, and at the same time, the cost of operations for the organization, they are kept low. And when we talk about the digital, so digital is not only the transaction banking. Digital is a much wider term, and where when you say or you claim that you are a digital organization, or if I claim that I am a digital bank, then it means that I have created the capabilities to secure data and analyze data. And using the advanced data analytics, whether I am capable of delivering the services or make offers to the customers which are customized, which are relevant to their needs. And we are living in a world where the digitization, the maximum advantage is that it is the democratization of services, it is also the commoditization of services, and it is also the customization of services. In manual days, I could not offer the fixed deposits on the number of days basis that you have 5 days, 6 days, 15 days. It would be either you have for 3 months, 6 months, otherwise it would be a accounting nightmare. And that is where I say that we have made rapid strides, and it has benefited millions and millions of the deprived and the underprivileged, as well as it has benefited the top corporates in the country. So digitization, unless it enables the banking system to reach out to the last mile and to the financially excluded, then the purpose of banks and the banking would not be served. And at the same time, unless the banks are able to deliver in a very safe, secure manner services to the businesses and the corporate clients, then also the banks would be failing in its duty. Now, what is the trend and how does it benefit? And here I would also definitely like to draw on the, or you can call it an experiment, or the progress which State Bank has made over the last three and a half years. One is that the trend which I am now observing for State Bank of India, and which I believe would be true for most of the banks and maybe at varying degree. The State Bank of India now today, only 7 out of 100 transactions happen at branches. And 3 years ago when demonetization happened, around 50, close to 50% transactions were happening on ATM, and the share of the digital banking, which is internet and mobile banking, it was less than 30%. In 3 years' time, and because of now the new situation of COVID, where social distancing has become the norm, it has reversed. The share of ATM transactions has come down now to 29 transactions out of 100. And the share of internet banking and mobile banking, it has gone up to 55 transactions out of 100 transactions. So that is the shift, and that continues. And I believe that the share of digital and mobile bank, the internet banking transaction or digital banking transactions is bound to go up, and the share of ATM transactions is bound to come down. So banks would need all the channels to serve. The branches will be needed. Very often I am asked this question, whether we will cut down on our number of branches. My answer always is emphatically no. I will have more branches, but they will be smaller branches. Maybe you will find just not more than 2 people at a branch. Then The digital channel, of course, it goes without saying. The large part of transaction banking would happen through digital banking, and a smaller share of ATMs. And the important channel which has emerged for the banks is, of course, what we call the kiosk banking or the customer service points managed by our business correspondents. That channel has emerged a savior for the financial inclusion initiatives of the bank and for handling all the direct benefit transfers under the Prime Minister Garib Kalyan Yojana or the Ujjwala program or PM Kisan Nidhi, whatever money the central government or state government wants to transfer to the ultimate beneficiaries. India has created fantastic capability to do this intermediation, and we can deliver money in the accounts at the remotest corner using the digital channels, technology, and the kiosk banking. And because now the multiple channels are available, and that is why everybody has experienced that in the situation of pandemic, the banks have been able to deliver all the services without interruption.
Is to get some water.
Now, this is the current scenario, and this is the future. And another interesting analysis which I have is that as we speak nowadays, the number of transactions which happen on mobile banking are more or less equal to the number of transactions happening on internet banking. It was not the case 3 years ago. And ultimately, because everyone is so much in love with their mobile phone, that is the first thing all of us see in the morning when we get up. So ultimately, the mobile banking or the future of the digital banking, it will be all around mobility. Again, I am very proud of the fact that State Bank of India, we have created what we call an omni-channel experience. And the YONO platform, which is you only need one, it is not only about banking, it enables the users to use it for all their investment needs. And we offer insurance products, general insurance, life insurance, mutual funds, credit card, all the products of our subsidiaries, we are able to offer on YONO platform. And it is capable of providing online shopping. And more than 85 merchants are there. So whether it is Amazon, Flipkart, or you name anybody, IRCTC, in single application that facility is there. So this is for the retail customers. But that's not all. What it does that the enablement to the bank to offer pre-approved loans, whether it is for the retail, whether it is for the business, small businesses. So the digital lending capability has been enhanced multifold. And the best part is that it's very convenient to administer, and the default ratios are very low because the power of data analytics has been used in a big way. So it creates a win-win situation for everyone. For the customer, from the point of view of convenience and the lowering of the cost. For the bank, hassle-free for the staff. And again, in terms of profitability, it pays for all the costs which we incur on developing the platform. The latest example is for agriculture. So YONO Krishi, which is like we offer agri gold loan, not more than 10 to 12 minute process. Only last week I have launched facility for review of the KCC accounts And we have almost 75 lakh accounts. And within 4 clicks, annual review of KCC account can be carried out. So big boon to the farmer, big boon to the staff at the branches. Yono business we are developing in a big way, and many of you would be using it. And now, if you open LC once,
This gallery.
in time when you want to open a letter of credit, it is just 3 to 5 minutes process. So ultimately, as I said, that the future of the banking, future of the businesses, future of the country lies in adoption of digital. And it is happening everywhere. So we have to imagine a country where whether it is health services, education, banking, financial services, business, distribution, everything, it is an interconnected world. And what it will do is that apart from the customer convenience or ability to customize the products, the productivity of Indian economy will improve. And if we look at our competitive position, India position, so in terms of productivity, we ranked low. But today, because we have the power of digital, we have the intellectual capability. There is no doubt about it. And Indians have done so much work in Silicon Valley, and when I see many of the fintechs and the startups, when I engage them, amazing work they do. So a partnership where a bank like State Bank of India, with all the reach, scale, and when fintechs with their innovation and their capability to develop very innovative solutions, and whatever field you take, even for agriculture, there are 3,000 agri fintechs. So what is happening today, some sort of I can say, whether it is a silent revolution or transformation, which is happening in the country, the power of which probably because we are living in these times, we don't realize. But the model which is evolving, ultimately no business in the country, whatever business you are in or I am in, will not be able to survive unless they have a strategy to go digital. And the partnership between the banks, the financial system, the governments, the businesses, this can deliver immense benefit to the economy as a whole and contribute to the prosperity of the country. So you will have to be connected, whatever business you are in, you will have to adopt technology, and all the ecosystem, it is very much in place, and we must make full use of it. And I can only say that the process of the digitization, which is started with almost 5-6 years back in a big way, and with all the enablers in place in terms of the availability of the right type of technology, right type of intellectual capability of our people, the COVID-19 has just brought in a new paradigm. And earlier, I can say it was a push which was coming from, say, the banks to adopt digital. Now today, that task has become easier in the sense that the demand is also there. And in last 6 months, after March 15, I have not traveled. I have used all the technology and video technology to interact with people. So in a way, I always jokingly say that I am healthier than what I was 6 months ago, because traveling was taking its toll. So the great power of technology and capability to address and interact with all of you on this platform without traveling, this itself is a wonderful experience. And once again, I would like to thank Siki for inviting me to deliver this lecture, G. Ramachandran Memorial Lecture. And it is indeed I feel honored delivering this lecture, and thank you very much for inviting me.
Thank you, sir. Thank you, Chairman.
Thank you so much, sir, for the very cerebral and very intellectual and thought-provoking lecture to mark the 7th memorial. We have, with your permission, sir, we have restricted the number of questions that we are taking, but we have handpicked a few. I could share these questions with you as a so that you can answer it in any particular order, because they kind of link to each other. The first question is from Mr. Kandaswamy Subramaniam. He was a senior official in the finance ministry before he retired. He wants to know, sir, of you, digitization of banking is a long-term process requiring vast infrastructure and behavioral change. Do you think, as chairman of State Bank, COVID has hastened the process when economic activities were known to have shrunk to an abnormal level? His second question is, in your assessment, how many account holders operate net banking? Did the level go up during COVID? Some of which you did touch upon, sir, but how could it have been where there was an economic slowdown along with an increase in unemployment? The second question is from Arvind Chandrasekhar of the Madras School of Economics, sir. And at Madras School of Economics, you will recollect, is where the former governor RBI, Mr. Dr. Rangarajan heads. Arvind wants to know how sticky it is going to be to adopt digital banking. And he wants to know, what do you believe is going to be the new narrative that is going to be followed in this new normal? The final question, sir, is from Mr. G. Jayaraman from Indonesia, Jakarta, Indonesia. He wants to know if and when the Indian GDP grows to 5 trillion, are our banking systems ready to handle such a surge? And the other thing is, his question is, I read in the biography of memoirs of Mr. G. Ramachandran that he was in the Prime Minister's Secretariat initiating the nationalization of the 14 private banks. Today, the government is taking many government sector companies to the public or trying to sell. How different are the two economic scenarios as you see? These are some of the questions we are permitting to place before you, sir. Thanks so much.
So, thank you very much. The first question about digitization and the adoption, consumer behavior, and the growth in the internet banking and mobile banking. So I will cover in one. So one is that the adoption has been much higher. And as I said, that we are reaching a situation where mobile banking transactions have become equal to internet banking, and I'm very sure they will overtake. And I will give you an example that, as I said, that we have 450 million customers, 45 crore customers. More than 7 crore are on internet banking, and about 5 crore are on mobile banking. So mobile banking is still, there is a huge growth potential. And these are two versions we offer of mobile banking. One is YONO Lite and one is YONO. And every day, even in pandemic, only for a 15-day gap, where our daily registrations came down to about 20,000. Every day, 70,000 registrations happen. And I think Mr. Pradeep Kumar or somebody spoke about that. We have 2.4 crore mobile banking users, but it has now become 2.7 crore. So every 10-15 days, we are able to register about almost 10 lakh users. It is addictive. Till such time you don't use it, then you don't use it. But once you start using it, then it is an addiction. And my own personal example, I can say that I now don't visit my internet banking. I do everything on YONO, and we are continuing to expand the reach. So right from starting from opening an account without visiting the branch, n number of facilities are available. Ultimately, we will make it that you will have to ask the question that why do I really need to go to the branch? So that is the power. And in pandemic, the registration has not come down, it has gone up, and particularly on the mobile banking. And as I said, to answer the question around stickiness. So once you get accustomed to it, then you don't think that you will be doing banking any other way. So that is very much there, because we all are, I think there will be very few people who don't love their mobile or don't have mobile. So that's why the power of mobile is very high. Everything now we do on mobile, watching even movies, we do it on mobile. So why not the banking? And this is definitely the new narrative, that mobility. People need mobility for everything. The only part is that because of the pandemic, we have become immobile. But that will not be the situation for long. And about the Indian GDP, $5 trillion, absolutely. The banking system in India has the capability. So we are already a $3 trillion economy. We can forget this setback as a bad dream, but neither the pandemic would remain and nor the degrowth will remain. The pandemic will also go and the growth will also come back. So it's not that these times will remain forever. And if the banks have been able to support the economic growth, which has been fairly good in the last couple of years, so there is no reason to doubt that banks will not be able to meet the requirement of the economy. There are a couple of things which need to be done that I'm not covering at length, but definitely the banking system is capable of supporting this. Now the question around nationalization, it is a very sort of a question which invites a lot of debate. And my view has always been that ownership should not matter. So if we are talking about that, who holds the equity, whether it is the government holds 55% equity or it holds 40% equity, if the emphasis is on the way any institution is governed, so that is more material factor. So we have done, and we have known that we have badly governed private sector and we have well governed public sector. So we have both. Now the very often the question comes that if a private enterprise is going down under, it is not taxpayers' money. So I don't believe in that. Any enterprise going down means it is a loss to the taxpayers, a loss to the country. Whether it is a private enterprise or public enterprise, closure of any enterprise is against the interest of the common man and the taxpayers of the country. A private sector bank, if goes down, will it not be a loss to the taxpayers? So I have not been able to subscribe to this view that a private or a public, and there is a difference as far as the taxpayers' money is concerned. Now the question is that the nationalization and now the current thinking about divesting of the stake by the government in some of the banks. So one is that banking system has developed a lot. We have a lot of private sector players already there. And the consolidation of the public sector banks has happened. And it is a work in progress, but within a year or so, that will happen. So it will be advisable. There are only two choices. Either any small private sector bank, they find a niche for themselves. Otherwise, they cannot compete against neither against the larger public sector banks nor against the private sector banks. So what can be done in such a scenario? So I think this move around where some of the private sector, public sector banks, and they can be privatized, it would not do any harm either to the banking sector or to the economy. So we have a scenario where we have a state bank, at least 6 large banks post-merger. So they can take care of any social banking agenda of the government anyway. And then rest of the banks can be in the private sector. And the needs of the economy definitely in 1970 were very different than what they are today. And as I said, that ultimately it doesn't matter who owns it, what matters is how the entity is governed.
Thank you so much, sir. We have questions, including from Mr. Sanjay Panda of the 1980 batch of the IAS. And we have a whole lot of other questions. In the interest of time, if you permit me, sir, we'll...
Please carry on, because I have time, no problem.
Okay, sir. The question from Mr. Panda is, at the appropriate time, would it help if, as the head of the main banker of the country, how digitization is helping the poor, how and if it is reducing transaction cost and its impact on NPA? The question is from Dr. Sanjay Panda, IAS.
So I think I mentioned in my speech that the digitization and the transaction cost, it was impossible to deliver what has been delivered only because of digitization. Today, we have from the banking system 55 crore Jandhan or BSBD accounts, and thousands of crore of rupees being transferred. And there are like many pronouncements by the government officials that it has saved almost nearly, I am told, 50,000 crore for the government. So the transaction cost for the government, significant savings have come. And for the banks also, I would say that it's not a bad deal. Apart from earning some commissions by way of DBT, but it has opened up new opportunities for the bank. We are having more balances in savings bank account. So inclusive banking was not possible without digitization. I don't foresee a situation where without a technology platform or the digital or the technology and the partnership with the business correspondent, it was able for the banking system to serve so many customers who were otherwise financially excluded. And if I talk about the transaction cost, when we do a transaction at a branch, it costs the bank close to 60 rupees. An ATM transaction costs about 9 rupees. A mobile or internet banking transaction costs less than 1 rupee. And kiosk banking, where business correspondent, it costs about 13 rupees per transaction. So obviously, if I take even the combination of kiosk banking and plus the mobile or internet banking, the cost of transaction to the banks are coming close to 13 rupees per transaction as compared to nearly 60 rupees per transaction for the branch. Impact on NPA, the ability now to underwrite digitally by using the data analytics, where a lot of data now goes into credit risk modeling, where the internal data as well as the what we call the big data or external data that gets analyzed, and as compared to the earlier years when all the credit rating modeling was based on parameters. Now the underwriting model is moving to the machine-based learning models, and these models are proving to be much better in predicting the default. And that's why, say for example, I will just use one example. We have a product called pre-approved personal loans, which is delivered on YONO, very simple process. And the delinquency ratio there is less than 0.3%. And we have built a book of almost now 15,000 crore rupees. So this is the power of digital. And there are many other things. It will become a long lecture on NPA management. I don't want to go into that. But even for corporate banking, early warning signals, the advanced modeling. So a lot of things are happening which is helping the bank in managing its quality of assets.
We thank you so much, sir. We shall take the liberty as and when the questions come to forward it to your office for your consideration.
Sure.
And ahead of the formal vote of thanks, one of our most distinguished members, Vice President of the Chamber, a man who runs a NBFC very successfully, would like to felicitate Chairman, State Bank of India, Mr. Rajinish Kumar. Over to you, Arun Algappan. Yeah, Arun, good to go. Go ahead, Arun.
Just one. A very good evening, ladies and gentlemen. First and foremost, thank you, Sri Rajinish Kumar, for honoring the occasion with your presence and delivering the 7th G. Ramachandran Memorial Lecture. The Memorial Lecture has been, over the years, a fitting tribute to late Sri G. Ramachandran, a soldier for the Gandhian cause, a teacher, visionary leader, and social reformer. Success seems to be connected with action. Successful people keep moving and they do not quit. An old adage from Conrad Hilton resonates well with the success story of our chief guest for today, Sri Rajinish Kumar. Ladies and gentlemen, Sri Rajinish Kumar's life and career is a story of an aspirational Indian who has achieved his ascent to the top of India's largest bank through consistency, hard work, perseverance, humility, and a robust personal value system, and an inclusive, decisive leadership. The youngest of 4 sons of an irrigation department employee in Uttar Pradesh and a postgraduate in physics from Meerut University, Sri Rajinish has always retained a calm and composed demeanor. I'm sure the trait has helped him successfully navigate many contours of his life and career. In a career spanning 4 decades, starting as a probationary officer at an SBI branch in a little-known town in Uttar Pradesh in 1980, Sri Rajinish has since made the journey to becoming the chairman of the State Bank of India. During his tenure at SBI, he has served with passion and aplomb across several roles, including CGM of Northeastern Region of SBI, Deputy Managing Director of SBI, MD and CEO at SBI Capital Markets, Nominee Director of SBI's Life Insurance Company Limited, Regional Head SBI UK, and Vice President of SBI Canada. As a distinguished career banker with experience of working in India, Canada, and UK, Sri Rajinish has significant expertise across corporate credit, project finance, foreign exchange, retail operations, digital banking, and international operations. As a transformative leader, not missing the bus has been a key hallmark of Sri Rajinish's leadership. At SBI, he has been driving a transformation strategy focusing mainly on 5 areas: customer service, corporate credit revamp, digitization of banking operations, synergy between subsidiaries, and development of human resources. Under Sri Rajinish, SBI's efforts have yielded clear results, with the bank boasting daily customer base growth of more than 80,000 accounts at its peak in FY 2020. In addition to these efforts to transform SBI, Sri Rajinish has also been playing a key role in supporting the evolving fintech startup ecosystem of the country. Under his leadership, SBI has operated a special scheme of SBI Fintech Innovation Incubation Program in order to support the ambitious Startup India campaign of our Honorable Prime Minister. The decisive and calculated risk taker, Sri Rajinish, is driving the transformation of SBI through digital and technology-led innovation, and strongly believes collaboration and partnerships to be the way forward in effectively driving change at SBI. In his lecture today, Sri Rajinish elaborated on the transforming digital banking landscape in India. His words reflect his sense of passion for India's financial services and his commitment to the digital banking cause. As a fellow participant in India's financial services industry, I cannot agree more with his views. With leaders like him, I'm sure our country's banking and financial service industry will reach greater heights in the near future. On behalf of SICKI, I once again thank Sri Rajinish for delivering the 7th G. Ramachandran Memorial Lecture. Dear sir, it was indeed a great pleasure to host you. Thank you all. Jai Hind.
Thanks, Arun. And I now invite Chella Krishna, Executive Committee member and grandson of G. Ramachandran, to propose a vote of thanks on the occasion. Over to you, Chella Krishna.
Thank you, President Ganapathy and other members of the Executive Committee and friends, ladies and gentlemen. It gives me immense pleasure to propose a vote of thanks on behalf of SICKI and to place on record our gratitude to Sri Rajinish Kumar, Chairman SBI, for addressing on the occasion of the 7th G. Ramachandran Memorial Lecture. In these times of Zoom calls, difficult economic environments, and endless complexities across institutions, we appreciate the time that you have given us amidst your tormenting schedule. Sir, your comments on digital banking and its impact on creating a new normal are most appropriate at this point in time when the world is going through an unprecedented shuffle of its financial practices. Ideas like branches going lean and digital onto the cloud, a rising preference for online payments, and a virtual onboarding of customers are the new mantras that the ecosystem needs to quickly synthesize. Our dependence on the digital world and the infrastructure elements within this world is paramount, and the advent of digital in every phase of life is virtually akin to the introduction of the printing press in the 15th century by Gutenberg. Your lecture, sir, demonstrated to us the great migration of banking in COVID times and its impact on retail banking. You spoke of the jam trinity and the true meaning of digital while elaborating about the last mile inclusion. Your elucidation of the interplay between data and decisions was fascinating. What was most interesting was to see how a giant like SBI competes with startups like, say, a Stripe or a Katabook. I'm reminded of Lou Gerstner's book, Who Says Elephants Can't Dance, which once told the world that big and nimble is actually possible. Kudos to you and your bank, sir. We are once again grateful to you for your insights, which will certainly affect thought leadership in this area. Particular thanks for taking so much of time to answer the questions that came up from our participants. We are also thankful to the committed tech support team of SBI who helped in aligning the chairman's technology engagement with SICKI. I also extend my thanks to SICKI's secretariat, headed by Dr. Raghavan and assisted by Ashwin. Finally, my thanks to all of you for attending this lecture via the virtual world and spending with us your valuable time.
Thank you so much, sir. It's been a high privilege and honor, the 7th G. Ramachandran Memorial Lecture.